Hello. If your quiz question started with the group statement of cash flow, where you are calculating movement in inventories, trade receivables, and trade payables, or in other words, you have Michael as the beginning, then this is how you go about it. As I explained in the previous video, you are looking for the cash in the working capital elements, which are inventory, receivables, and payables. So inventory being an asset, receivable being an asset, and payables being a liability. Your opening receivable is 2019. Your closing receivable is 2020. The acquisition will bring in addition, will increase receivables, will increase inventory, will increase payables. The disposal will decrease inventory, will decrease receivable, will decrease payables. So that's how you interpret the question. Your opening balances, your closing balances, additions, and subtractions. And so let's see how this will play out. So with your inventories, your opening balance, which is under 2019, is 795,300. Your acquisition of inventory, acquisition of Abby, which brings in inventory, is 67,500. Then you add that and you subtract the disposal of Barbie inventory, which is 102. You compare that with your closing and you have an increase in inventory. You can see that it is 760 increasing to 1,120 and 50. That's an increase in inventory. An increase in inventory is an indication that cash is going out. We have used cash to buy more inventories. That's what the interpretation is. So this is a cash out item. So you have to show that there is increase in inventory of 359,250, or that there is cash outflow of 359,250. Like I said, you could use your T account or you use this form. Whether you use the T account or this form, your answer should be the same, 359. The receivables, your opening receivable is 930,660. Your acquisition of additional receivable is 118,500, and the disposal of receivables is 100,500. Then you compare with your closing receivable, that is the 2020 receivables of 657,750. Now I expect you to be holding your question whilst going through this and be able to compare the figures and make sure you know where the figures are coming from. So again, with receivables, it is a decrease in receivables, which is an indication that the receivables have turned into cash. So it's a cash inflow, a cash inflow. You can see we have 948, which has become 657, a decrease in receivable, which means we have made the sale of the receivables, or we have collected the outstanding balances, and our balance has reduced at the end of the year, and therefore we have cash inflow, additional cash. For trade payables, again, your opening balance of trade payables 2019, 1,293,750. 1,293,720. And your addition through acquisition of payables is 123,750. 123,750. And the disposal, which is a reduction in payables, is 86,100. And you compare that with the closing balance of 1405,200, you have an increase in payables, and an increase in payables is an inflow of cash because you have been able to acquire like more goods without having to pay. So cash is retained. Cash is retained. So that is it for question 1. In question 2, Senam Limited was formed in 1st January with fully subscribed stated capital. So again, this is where you have to calculate the net gain or loss on monetary items. I explained in the previous video that when you are asked a question like this, calculate the net gain or loss on monetary items, you have to identify the monetary items. You have to identify the monetary items in the question. And from this question, you have 2 monetary items. First of all, remember, we have studied for the purpose of this course, our monetary items are receivables, cash, and the loans. Receivables, cash, and the loans. And in this particular question, you have cash and loan. And so you identify the movement in cash by preparing your cash statement, cash account, cash receipts, and cash payments so that you determine your cash balance and you determine the movement in cash. Again, you have capital. They raised capital at the beginning of the year. They took loan in March. And then they made sales, and sales is at average the capital at the beginning and the loan at the in March, which entered 140. So it's 180 over 140. And the sales is on average. Now, you have to take note that in your question, during the year, 800 inventory items were sold at an average unit price. Now, all transactions were for cash except 40% of the sales made on credit. So it means 60% of the sales is on cash basis. 60%. So it is 800 times 3,750 times 60%, which is your cash. You are not going to bring 800 times 3,750, which is what some of you did. The total sales is both cash and credit, but you are looking for cash sales. You are looking for cash sales. Cash sales. So you work with the cash sales here. All right. So that gives you your sales. That's why it is 480. The 60% is the of 800 times 3,750 is what you are dealing with as your sales here. Right. Your payments were the warehouse inventory and expenses, and therefore you use the CPP factor appropriate for those items. It's just the same. It's because I gave you different sets of questions, and I don't want anybody saying that they don't know how their questions will look like. That is why I'm showing you this, and so I'm taking you through the second set, and therefore you have a net loss of 405. You need to pick your question and follow through with this, and then figure out how this works. Then your question 3 is on about Takoradi acquiring 80% of Yaoundé. Takoradi acquiring 80% of Yaoundé. And again, cash paid in CD. And again, the rule is that you should calculate the net asset in the functional currency and the goodwill in the functional currency. Using the appropriate rate, you then translate after you have determined the net asset at the beginning, the post-acquisition profit, and the net asset at closing. So you have your net asset at the beginning, which is 6 million. Your net asset at closing is 6,360. Your post acquisition profit is 360,000. And then you translate appropriately. Again, your rates are different. Here you are using 6.5, 6.0, and 6.2. So you pay attention to that and you use the appropriate rate. Goodwill, you must translate the cost of investment from Ghana cedi. The 1,145,400 must be translated into the functional currency of the subsidiary. And so that gives you the 7,445. Your fair value is in West African franc. Your net asset acquired is what you calculated at the beginning. You determine your goodwill, 40% impaired, and then your goodwill at the reporting. And then you translate the goodwill, the opening goodwill at the opening rate, the impairment at average, and goodwill at reporting at the closing rate. And you determine your exchange gain. And then you share that among the parent and the subsidiary. You share that among the parent and the subsidiary. Remember, the parent will be held in equity. The subsidiary will be added to NCI balance. Okay, so that is it for the second set of questions.